Hey, what's up, guys? It's Ian. We're back with another episode, and I'm excited for today. My friend Glenn has hopped on, and we are going to talk, Glenn, about his investment track and what he's done over the years. And, well, enough about me. Glenn, you want to introduce yourself? What's up, brother?
Hey, Ian, how are you, man? Yeah, no, happy to do it. Happy to be here. Glenn Younes, I have been investing with Ian and some of our colleagues for a lot of years now. My background's mostly in media. Spent, uh, I don't know, 15 years of my career either producing or hosting, mostly radio, but some TV as well. And I also run a nonprofit for a Hall of Fame football player, and I do our business dealings as well. So I have a few different buckets. And then that leads us into, I guess, investing too is my great grandparents invested in real estate years ago. I mean, hundreds of years ago plus. And so that was sort of always in the blood. And 22 years ago, about just a year after graduating college, I bought my first condo, which I still own, um, and bought a second condo in that same development. They're garden units right outside of the Washington D.C. area, a couple mile or two from the D.C. line, maybe three. And then 2 years after that one, I bought my third place right on the DC line, Silver Spring, Chevy Chase area. And I've lived to them all and sort of not really handy, but fixed them up ish. And then, moved out and did it again and et cetera, et cetera. Um, so yeah, I, started in real estate young at 22 years old in real estate
Yeah.
and got a few rental properties and do a little bit of this, a little bit of that.
Yeah, no, I mean, you got started. That's half the battle. I know you glazed over your radio career and what you do with the foundation and all the good stuff. We've had the opportunity to be a part of some of the stuff with the foundation, and it's been fun. You guys are doing a lot of stuff over there, which is cool to see because that's why we all invest. So we have opportunity to have more time to do fun stuff like that. Your
Yep.
first what's the big difference? Like, and we had the chance. Well, we helped you out at one of your condos,
Yeah.
renovating it. What's the big difference between like owning that versus say like investing with ourselves or a couple other passive investments that you're doing? What do you see the benefits or the disadvantages of either side of that?
Yeah. No, it's a great question. So obviously with my own rentals, you can be as hands-on as you want or as hands-off as one wants. So it's much more tangible, much more hands-on. My rental properties that can be both very good and very bad. Um, I'm not very handy. I'm not a total klutz, but I'm not very handy. And so I couldn't do a lot of elbow grease on my condos, for sweat equity. That wasn't my game. I had to figure out a way to maintain these properties on a pretty tight budget for a while. I mean, I bought my first condo when I was 22, and like nobody helped me with that. So, um, so that's the downside. Is there's a lot of unknowns financially and physically, but once you manage that and realize it, and as you get older and more successful, you're able to put more things in place, whether it's a handyman or friends like you guys or whomever, to sort of handle some of the big what ifs and uh-ohs. Um, and conversely, with some passive investments I have in real estate, whether it's, um, I invest in some hard money loans, I invest in some storage with you, I invest in some retail stuff in another venture that I'm in. Um, the good news is it's totally hands off. And if you have a great operator, it's really beneficial. Um, I'll tell a story about two other friends that are in a passive investment, one that's going incredible and one that is they just don't know. And it's all based on the operator. And then there's some other, but conversely, with the passive investments, if you have a great operator and things are going well and you get proper information, whether it's in the portal or an information blast or text or however it is, and you get your distributions and you're feeling good, I'm pumped, right? But the opposite of that is you're invested in something that's totally passive. You're at way more than arm's length. And if it's a bad operator, man, your thoughts can really go wild with what happened to my money. Side note, not an investment expert, not an accountant, not a blah, blah, blah. But just like all you degenerate gamblers out there, only invest what you can't afford to lose, right?
That's right.
And so I am probably, and we've had this conversation over the years, I am probably overly cautious to a fault. I've probably left a fair amount of money on the table by not investing. But the trade-off is I have a little bit of peace of mind that if I invest in something that doesn't go well and I lose it, whatever, it didn't hurt me. So I consciously trade a fair amount of the upside to mitigate my downside because I'm in a situation that I don't need to be the most successful, richest dude in the world. I'm really looking to be one of the laziest, most comfortable dudes in the world. And I'm doing a pretty good job at the lazy part for sure. We'll figure out the comfort later. But, so and also, there's the emotional piece of, I want to be in the mix. By the way, I don't know what your cussing guidelines are here, but I'm
let her rip, babe. Hey, if they're watching me, you already know that they know I'm going to curse, so it's good.
I've held back on like 3 or 4.
Come on, man. You know better. Let her rip.
No. But, you want to be in the mix, right? You want to be in the game. There's action too. And especially when, I'm not out here investing with anybody. I have a handful of off-market investments. They're mostly with people that I know really well or that my people know really well that I've done business with and vice versa. And I feel really comfortable doing that business. And when I do, by the way, I keep and you know this, Ian, I keep a really tight circle. Like I know everybody, but I got a handful of my people and I don't really go out of that. And so, but when it's my people, I'm down. I'm down for a smaller amount usually because I'm a little bit soft and a little bit scared, but I like both. I have plenty of money. Plenty. What's plenty mean? I have my share of money in the market.
So what's like some other just like, because your investment profile is kind of similar to like Dan's, my business partner. He's like very cautious, like this is the bucket and that's it. Like what else do you invest in besides, obviously what we're doing or the hard money loans or a few of the other ventures you've joined in? What's like a I guess in your eyes, like conservative or something that you're comfortable putting money into that you would say, okay, this is equally as comfortable for me, just so people have like a frame of reference.
Yeah. I mean, I'm probably too real estate heavy. I'm invested in the cigar business, but that's through my business partner. I'm invested in a medical cannabis business. And most of it's real estate. I like the type of investments that if the shit hits the fan and we have to liquidate, we're probably going to get most or all of our money back.
Yeah.
Right. Which is collateralized stuff.
Yeah, there's something behind it versus saying, oh, you're buying like a food distribution company.
I got an idea. And it's a new technology. It's like, I've seen some because of my role with my partner. I see a lot of that stuff come across. I mean, dude, you wouldn't believe how much stuff we get pitched. My bullshit detector is fucking going off every day because I get all kinds of bullshit. We got the next this, we got the next AI, we got the NFT, especially because, I do a lot of business in the famous people realm. Man, I get, NFTs are hot. You should jump into it. It's all bullshit, right? Like, so my bullshit detector's going off all the time. So I think that's why I tend to like collateralize stuff, but also it's my background. My family owns a small little shopping center. I've always been in and around real estate and not a big real estate family per se, but my family's always dabbled in real estate. Both my immediate family, my parents, my mom and stepfather, and my grandparents and my great grandparents. And so it's always been sort of there. And when you realize what it is and you take to it, I also did something that I got lucky doing, Ian, is, my dad's side of the family are all sort of engineers and accountants and business owners and very analytical. And I got a bit of that. My mom's side of the family is all sort of artists and creatives. And I got a bit of that too. So I got very lucky in getting both of those brains. One. and being around it and getting to see, how people operate in businesses, but also with their creative things and stuff like that. But I was in radio, right? I went to college. I knew since I was 8, 10 years old, I want to be in radio. I want to be in TV. I've always wanted to do that. And I did it. And I did it in the sports realm. And I did it at a fairly high level. I was at Sirius XM for a handful of years. I had a national radio show. I was at Fox Sports Radio. I was at CBS. I mean, I had a pretty good, awesome, fun career. But I left for like a year and a half, 2 years when I was like 23, 4-ish. I don't know, early out of college. I was in radio for like 3 years, and I left and I went to go work for a family friend in the mortgage and real estate business because I was antsy in radio. Whatever reason I left is the world talked to me. I was drawn to the business side of it, whatever it was. I wanted to see how the real world worked, right? So I was able to do loans. I was able to do retail installment contracts and private mortgage notes and conventional loans and get a feel for understanding of what the fuck is going on in the world, what interest rates are and 10-year bonds and all that. Because I didn't know any. I'm a fucking playing radio. I'm a kid, I went back into radio and did that and did media and sports for a long while. But it gave me an understanding. So while I was playing radio, as I call it, I could still have my brain on buy a rental property, buy another rental property, buy another rental property. They were primary residences at the time. And so I was living in sort of both that business and creative world. And while my condos that I still own and are still rentals are doing pretty okay for me, they fit directly into my demo and profile. They're like a pretty decent investment. They're not a home run. They're not a grand slam. The equity play they've gone up a little bit. They haven't gone up a ton. I'm making a decent margin on them, but not a ton. They have hefty condo fees. But my year-to-year, month-to-month, day-to-day outlay in tenant improvement, it's not that much. So it's a pretty decent thing. And so that's sort of, I don't know if I answered your question. I said a lot of words and I moved my hands a bunch. But that's my taste for investing.
Yeah, no, you like stuff that's easy and predictable, and I think that's what a lot of people are looking for.
Because I'll earn my way through the rest. I'll earn my way through the rest of it. That's how I think, at least. And by the time I'm done earning or less fortunate in how I earn and make a living, hopefully I've done the right things. That I'm kind of, I'm okay. I'm not, I'm not going to be flying planes like you and J-Rock, but I'm going to be all right.
Hey, man. Do your thing, and that's a lie. I saw you on an episode on YouTube flying in a private plane across the country for the Super Bowl. But people can go find that. Just track him down. You see the guy in the picture.
Maybe
So, but anyway, it's all good now. I mean, look, here's the thing: you know exactly what you want, and you figure out how to allocate your capital into the buckets. And I think it's super smart. So, man, I appreciate you coming on here. What one last thing before you go, like what do you see for your investment trajectory? You got some younger kids. What do you plan on doing over the next few years in the way of investing?
So a couple things. Before I answer that question, and if I veer off, bring me back. But the one thing I will say is, and maybe it's just because of luck, or the last 12 years have been a skyrocket around this country, in terms of just things mostly going up. And maybe I've been fortunate, but every time I make a purchase, whether it's our primary home or the house we built prior to the house that we live in now, or the investment I made with you guys, or the investment I made in this other thing, every single time I look back on it, including the ones that have lost, because I can't just say, oh, only the ones that win. I wish I'd put a few more bucks in.
Yep.
And when I say that, like, I'm conservative to a fault, I'm not. I'll take the blackjack analogy. I'm not able to capitalize on the wins as much as I should because I'm not putting enough out there to gain the rewards. In blackjack, you make your money on your doubles and your splits. If you're afraid of that, you're going to lose your money. You are. And so when I went to, I'll give it. Great example. We went to buy this house that we live in now, however many years ago, 4 years ago. And I told my wife, this is our budget, whether it was or not, this was our budget. And we went to go looking for houses. and we sort of saw mostly what we wanted, mostly in the area we wanted, for mostly the budget we wanted. But net, we either had to decrease what we wanted or increase our budget. And my father-in-law pulls us aside and goes, "Hey guys, like, this is brain damage. You can afford most of what you want. Just go buy the house you want. It's fine." And that same thing is with investments. For me, I've been like, it's a good investment. Here's Ian, here's a check. And it's like, okay, you want to do that? Yeah, cool. Meanwhile, I have a family member who you know well who's like, "Why are you only doing that?" And I'm like, I don't know. It's. She's like, "No, it's not bad, but like, you should do more. This is a good investment." And every time I look back, I'm like, "Man, I probably should have done more. This was a good investment." And so for me, not anyone else's advice, is sometimes it's okay. And I'm telling me this to myself in real time. Sometimes it's maybe okay to be a little less comfortable with what you're doing, because actually that's the right move. Michael Farr is a guy I listen to. He's an investment guy out of DC. He's on CNBC a bunch, and he always preaches something to that effect. Like like everyone wants to trade. Everyone wants to trade on emotion. When it feels bad, that's when you buy, right? That's not when you sell. And so when you feel the pain, anyway, point is I wish I kicked in more. Where I'm doing with the future, much of the same. I'm not full Dave Ramsey yet, but I am really, really in two brains of how can I increase my passive income and how can I minimize my monthly outlay. I am really, 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 really driven on getting to like net zero plus, meaning like all my passive income covers my bills and then some. And to a point where like, hey man, if I make 80 grand a year or 800 grand a year, it doesn't fucking matter. And change those numbers based on whatever your goals are in life and your income and whatever. But if I make $1 or $20, I'm good, because at least I know I've got money in the bank and I've got no real bills. And like, don't get me wrong. You always want to earn. You always want to put money away. You want to save for the future. I'm not saying that. And I'm not even anywhere near my goals. But where my focus is, because you got to have focus to get there, is minimal outlay, lots of passive income, very comfortable situation. And that's the goal for the next, my daughter's not even 2 yet. So for the next 15 years, whatever that looks like.
In the end, you know what I heard, and I'll summarize this for everybody. If you made it to this part, the man has a plan and he knows what fits in his investment profile. And I think too many people shoot from the hip. Let's go buy 25 grand of stocks. Okay, well, do you know anything about that stock? No, but everybody else is buying it. Okay, well, bro, like,
right.
You can at least call me and Dan and yell at us, or you can call some of our other friends if you invest with them. You can call, and you can't call the CEO of Coca-Cola or Tesla. I guess maybe you go on Twitter or X, and find the CEO of Tesla. But in the end, you should really know what you want, how you want, and what it's going to do for you. And I think that's really smart. And I'm glad you summarized that. And hopefully you guys follow along on that. Glenn, I appreciate you hopping on. Do you want to give a shout out to the foundation, or you want to give any shout outs before we roll? And I know some of our audience would like to, we got a lot of our audience still in Maryland and would be willing to help out.
Yeah, we are. Thank you. And it's always my pleasure, man. I can talk. It's the only thing I can do.
We both can, babe. We both can.
No, I mean, we are in the middle of a big capital campaign for our biggest project to date. It's called the Reed House, and hopefully one of the banks that I'm trying to pitch actually takes the naming rights of this thing, and it's called XYZ, Equity Warehouse. Get it? Equity Warehouse. Anyway, but we're building basically an after-school program center, a home. We're building a row home in West Baltimore, so that kids after schools, when there's no school, is the most dangerous time for youth. So in this particular case, it'll be mostly middle schoolers. After school programming, summer programming, learning, giving them proper foods, meals. And so edreedfoundation.org, the Reed House is our big project. We got to make a couple $1 million up here out of thin air, and we're on a big fundraising campaign now for it. So thank you. But anyway, that's what we do.
Well, I appreciate you hopping on. Anyone that wants more info, either track me or Glenn down. Always love helping out. And we'll catch you guys on the next one. Appreciate you.